All right, now to our first conversation. We see ethical investing, also called socially responsible investing. It's practice of selecting investments aligned with one's moral, social, environmental, or religious values, not just financial returns. And we see recently AFRINVEST'S they launched a 2.5 billion naira halal fund, offering about 25 million units at 100 naira each. Thoughtfully structured around SUKUK, SHARIA-compliant equities, and ethical contracts, designed and approved by the Securities and Exchange Commission. It offers a low entry path for retail investors, especially in northern Nigeria. Well, joining me now to unpack this, we have Dr. Ike as the Managing Director, AFRINVEST West Africa, joining me right here in the studio. It's great to have you, sir.
Good to have you.
And it's been quite tough, getting you on the show. I know you're a very busy man, and you wear a lot of hats, at this point. But thank you so much,
it's my pleasure
for coming on today.
Yes.
And I can imagine, I'd just like to get a brief overview of what you've seen, in the investment climate so far in Nigeria. We're seeing, it almost seems 2025 is the year of record highs, with all of the uncertainty.
Well, I think you have to realize that when you're down, coming up, you're really coming from a bottom.
Right.
And so the climb out of the trough we've been in over the last few years is, creating a momentum and a spike in the market that's exciting people. Clearly, coming out of COVID, the contraction we saw in COVID, and then you see the challenges we witnessed in the economy once the new president came in 2023, taking out fuel subsidy. The central bank governor came in, removed exchange rate subsidy, and created more transparency. That was a massive shock we went through in 2023, coming into 2024. And now, suddenly, we seem to have digested the shock. And people are seeing now a semblance of, what I call green shoots of growth, springing out. And people are quite excited. Things are looking more stable. Importers can go to their banks and, bid for FX and, get it without having to speak to anyone at the central bank. So this combined with the president's, focus on, growing the economy, we'll put aside the borrowing for the moment, it's what is really encouraging. It's encouraging the market. And you can see some of that. Inflation is easing as well, and there's a moment, interest rates are easing off, so there's a shift from fixed income investments into the equities markets. And of course, equities are what most people see. The momentum is there, and so everyone is quite excited.
So it seems, for the case of Nigeria, all we needed was a change of leadership to see this bullish momentum. That's almost what it seems like at this point.
Well, we need the change of leadership, but we also need leaders that are able to plan long term. What we're seeing is a very short period of time in the space of an economy. So planning long term and putting in the fundamentals and realizing that sustained growth takes time. Just like if you want a young child to become a doctor, they're going to go through nursery school, 2 years, primary school, 6 years, secondary school, 6 years, university, 6 to 7, including residency.
Right.
And then you really have to plan for the long term. Unfortunately, our political cycles have tended to shift our economic trajectory quite abysmally, especially in the context of what is happening around us, the broader economy, global economy, trade issues. And now, we have Donald Trump at the White House, and, if he coughs, we're going to not just catch a cold. We could go into complete sort of Ebola symptoms. Yes, exactly.
Hypothermia.
Exactly, yeah. So we have to be extremely careful how we plan our own economic growth parameters.
Yeah. And for the global space, I guess, President Donald Trump is another bull, for that side of things. But let's not go there.
Yeah.
Let's hit the matter at hand now. Ethical investing. We've seen what's happened with, SUKUK in Nigeria, the oversubscription seems successful, at this point. It seems investors are quite, inclined to, ethical investing at this point. So it almost seems you don't need to sell ethical investing. Is that what it means at this point, what we're seeing, the way investors are reacting, to SUKUK?
Yes, if you were to take the the marketing of the DMO's last issuance, the 7-year SUKUK, that was a $300 billion naira issuance. That witnessed a subscription of about 2.2 trillion.
Wow.
You can see that it was massively oversubscribed. You can say for sure there's a real market for ethical-based investments.
Right.
And the challenge for us is that if someone is faith-based in terms of their investment options, then they are quite limited. So when a SUKUK comes out, that's why you see a lot of cash coming into that particular space, which then, turns, the common sense the other way around. We actually need to do more SUKUKs. We need to do more Sharia-compliant investment to be able to meet the market demand for, our Muslim brothers and a lot of other people who have ethical principles when they are coming to the investment space.
Right. Yeah. So I guess whichever faith,
yes,
it would apply to any faith? Yes,
of course. The AFRINVEST'S Halal Fund, is a Sharia-compliant investment instrument, but it also works for ethical, principled investors. So everyone is invited to buy into it because it has the framework. But we're using the Sharia-compliant framework to launch the fund. And in that context, we have strict guidelines that it must comply with. For example, it's a hybrid fund, so it invests in fixed income instruments and invests in equities. But for fixed income, we'll specifically look at, SUKUK bonds, the FGN SUKUK. State government can come in and do SUKUK bonds, corporate SUKUKs. In the equities space, we will not take all the stocks listed on the exchange. We'll look at specific stocks. So if we come to banking, for example,
right,
we'll be looking at banks that are Sharia compliant, like a Jaiz Bank or a Lotus Bank, so long as they are listed. But we will not invest in companies that are doing pork, for example, meat, or weapons, or what would I say?
Alcohol.
Alcohol, for sure, exactly. So those will exclude quite a body of a bunch of stocks that are doing things that are not in compliance with Sharia principles.
But does it limit profitability? When you have to do away with all of these sides when it comes to alcohol.
Yes and no,
business.
But remember, for the person that is Sharia, is looking at investments from Sharia principles, the option could be either very, very low returns or a higher return based on what the basket now is able to offer. If you look at the last SUKUK bond, it priced around 19.5%. And if you are keeping your money in, say, a Sharia-compliant bank, and you are earning 3% or 5%, definitely buying the bond is a whole lot better. You understand? So our Halal Fund is designed to track the 10-year SUKUK bond of the FGN. And the last issuance of 10 years was about 2 years ago. That's a 2023 issuance, and that was 15.75%. Obviously, interest rates go up and down. It's interesting that the 7-year SUKUK that issued in May is priced about 200 basis points higher, actually 400 basis points higher than the 10-year that was issued in 2023. But as interest rates come down, you would expect that rates would also trend downwards. But from the context, from the point of view of investors, it's either I have zero or I have a whole lot more.
Right.
And it's good to create that opportunity for faith-based investors. Yeah.
Right, quite interesting. Let's break down the Halal Fund now. If you can put that up for me, that's allocates about 70 to 100% to SUKUK and fixed income, up to 30% screened equities.
Correct.
If you can put that up.
Exactly.
Up to 25% in halal contracts.
Correct.
We have the Jara and the Musharaka.
Musharaka.
And minimum 10,000 naira, 90-day lock-in.
Yes.
Benchmark returns about 19% tied to FGN 10-year SUKUK, as you just mentioned. So looking at all of this, do you think investors will be keen, at this point? Do you think the appetite is wet?
Absolutely. Absolutely. We're already seeing an uptick in the price of the Halal Fund. We launched last week at 100 naira. As of this morning, it's already gained 2 kobo. So if you want to buy, it's 100 naira, 2 kobo.
Wow.
So you have to, come in, because the price is already out there in the market. So yes, we expect to see a lot of demand. And the reason we launched this SUKUK bond, Halal fund,
right,
is to meet the demand. We opened our Kano office last year in March, and every other inquiry was, okay, do you have Sharia-compliant investments? And then we just realized we had already been working on an ethical fund, but just opening that office made us realize the market opportunity we're missing. And so we worked with our financial advisor. Marble Capital is an investment bank that's focused on Islamic investments, and they guided us together with the team at the SEC. So we worked very hard to pull this together and make sure we have a product to serve the market.
Quite interesting, and you did mention the SEC there. If you look at the Nigeria's Sharia-compliant investment landscape, you see the Nigerian Securities Exchange Commission is aiming to list about 50 Sharia-compliant products.
Absolutely.
Worth about 5 trillion this year.
It's an aggressive and ambitious target, but it's doable. I think the market can really take all of that.
Right.
Yeah, it creates a whole basket of investment options for investors.
Right, and when you see this kind of investment options and this kind of target, what's the spillover effect for the economy?
Of course, growth. Because any time a security comes into the market, it means some corporate entity behind has raised money to then invest. And from a Sharia point of view, like if you think about FG and SUKUK, they're Ijara-based contract. That means the federal government has now raised money and are paying contractors to build roads and bridges. So there's stimulation of the economy. So that's exciting. If you think about 5 trillion naira of issuances hitting the market through Sharia-compliant investments, that's another 5 trillion naira of money that the federal government is not putting in. It's coming from you and I. And if you think about the pile of money we have in our pension funds, the funds we have sitting dormant effectively in our deposit accounts, in our savings and current accounts in the banks, some of these monies can go into appropriately structured investments, which is a key driver to the economy.
And I saw some data recently, and the dormant accounts are rising.
Let's not even go to dormant accounts. But I think if you look at the banking sector, I think it's about 178 or 180 trillion naira of deposits in the system. And meanwhile, we're looking for cash.
Wow.
So I find Nigeria to be a contrast all the time. We have, oil on the ground, and we're sometimes looking for petrol on the streets.
Right. And we're importing oil.
Yeah, we're importing oil.
Right.
We have a lot of cash in our banking system. We have a lot of cash in our pensions accounts. But sometimes, companies are looking for cash to do business. And it's a question of structuring and having the right companies being appropriately profiled with the risks packaged properly, so that investors will know where to choose and how much risk to take for this level of return, because you always have to balance the risk to the return profile.
Right.
Yeah.
And, definitely we're talking investments, at this point. And, H1, that's behind us now, but we've seen a lot of action in the first half of 2025. What are you seeing in this second half? When it comes to the investment landscape, everything in general at this point, even crypto at this point, because everybody's investing in a lot of things at this point.
If you look at the equity market, for example, the year started slowly. By the end of Q1, we were up only 2.7%, the all-share index. Then we saw some momentum picking up. By the end of Q2, we're now up 16.6%. Now, guess what? As of Friday close, we're up 30.6%.
Incredible.
Incredible. So, and this is what is driving a lot of interest, because people are coming back. If you're up 30.6%, imagine if you put in 1 million naira in January. It means you have 1.3 million. That's a lot of cash. You could actually, sell 20%, that pocket 300,000, and you still have your 1 million naira in the bank. But if you look at the composition of that growth, you see banking sector up 44%, ICT sector up 40%. There's an interesting one there, which is the agri sector. And that's really comprising of Okomu Oil and Fresco. Guess what? They're up 178%.
In just the first half?
Yes. So it means if I had just put in 1 million naira, I'm at 1.8 million naira today.
Wow.
And we started out the year with a base case market growth outlook for the full year 2025, thinking that we'll end up the year base case scenario about 30.8%. So far, we've already met our base case, as of last week. So that means we are now coming back to the market saying we could see a potential upside to up to 44, 45% for the full year. Bearing in mind that there will be profit taking across the year, and also bearing in mind there are some macro issues that would affect us that we've not thought about, and also bearing in mind considering what could be happening outside of Nigeria.
Right. So definitely we know nothing goes up forever.
Yes.
At this point. But in this case, should we be expecting a major pullback or just random pullbacks, but not a correction?
No, what we see is because for a long time interest rates have been very high, investors had all sort of moved to the fixed income space. But as you see interest rates coming down, investors are now shifting to the equities market. And that trend is likely to continue. So we've seen sort of contraction of rates from sort of the mid-20s to now the high teens. So 26, 28%, for example, last year. Even the FGN was borrowing in Q1. They front-loaded quite a lot of their borrowing. And, it's a bit much more expensive than now what they are seeing, where you could see sort of papers around, 16, 17, 18%. But as rates come down, and forget the CBN still keeping the MPR at 27.5%, we expect to see that continuous shift of investment moving from the fixed income space, where they feel there's upside is now uncapped, to now going into the equities. And that could create more stimulus for the equities market. But bear in mind that if you're coming in now, you're a bit late in the game, so some of us who came in early might take your money and profit from it. That means we'll exit the market, and the market may not go up as high.
So you don't want to be exit liquidity. That's if you're not invested at this point.
But it's always a good time to come to the market, so that you have a long-term view.
Exactly. Fantastic. It was great having this conversation with you.
Always a pleasure.
At this point, Dr. Ike is the Managing Director, AFRINVEST'S West Africa. Thank you so much for coming on today.
My pleasure. Thank you.
All right, we'll take a break now. When we come back, we'll be looking at financial services sector and its contribution to the first quarter 2025 GDP for Nigeria. That's at the moment. Just stay with us.